All right, guys, I am doing a Tattooed Chef earnings. I don't know why, but just want to see how many degenerates show up to this live stream. Golly, we cautioned you at 13, at 14, at 15, at 16. And here we are at $3.22 at the low, currently trading at $3.42 as I speak. Down almost 10% on the day. Let me know if you own Tattooed Chef. I did my best to kind of get you guys ahead of this one. I don't know when they're going to report, because when we pull up the recent filings here, it looks like it's not what I wanted. It looks like they are supposed to report today, but no set time here. So let's take a look. That's it. Just got to keep all the degenerates in line here. Give them what they want. You know, it's all about the 10x stock. Well, at this point in time, I would say that I would not be surprised if Tattooed Chef somehow reports, their earnings are pretty much out, but somehow reports expected earnings and shoots back up to $5 or $6 and moves like 70 or 80% in the next week. I would not be surprised. Just huge short interest probably at this point in time. And from when you look at the filing here, I noticed that they only have $14 million in cash, guys. Let me make this bigger so you can see it. And they're supposed to be reporting today or before today. It looks like they're supposed to be reporting today after the bell, but who friggin' knows? But I figured I would just go live just in case if they do. We can always talk about something else, as there are other earnings reports coming out today. But the company had $14 million in cash and accumulated a deficit of $108 million from the 9 months ended in September. Company had net cash in operating activities of $67. I mean $67, probably $67, $67 million. So the cash position's a little bit concerning here, guys. Something we've been bringing up. So their required date was supposed to be November 9th, and with unreasonable effort and expenses, the company is working diligently to currently expects to file Form 10Q on before November 14th, 2022, which is the extended deadline. So that's what leads us here today, is hopefully if you had the inverse Jeremy Lafufu ETF, you would be absolutely smashing it this year. Probably up a few 100%, I would imagine, especially if it was leveraged. Make sure you get that leveraged, right? Got to get at least 3x on the inverse Jeremy ETF on that one. So basically, we're just waiting for the bell, see what happens here. Gap down, selling off at $3.39. I mean, who would have thought this would have been a $3 stock? Guys, I honestly, I'm not even that mean with the company. I actually have a $2.39. I guess it's getting close to a buy for me, depending on what happens with earnings. But I had a $2.39 price target for me. Yeah, it's probably going to get probably a good opportunity to get it at those levels, but then I have to reevaluate the earnings because I have them with a growth rate of 29%, which we know is probably not the case anymore. So that changes the $2.39 outlook. So be interesting to see if they do report today, what we would plug in. If they do not report today, does anybody have any other stocks that they want me to look at for earnings here? Because I can kind of swing back and forth as earnings come out. Put them in the chat and let me know. See where we're closing the day at. Oof. This is a reversal of conditions on the S&P 500 here, guys. I don't know if you guys want me to go over the technicals really quick as we got We've got about 1 minute until the bell rings, but I can go over the technicals here really quick as we completed a 5 count to the upside, and we are reversing conditions. Probably going to test this line of support here at 389. There goes the bell. When we look at the MACD, it is, or the RSI is rolling over. MACD is getting overstretched. Everything to me is telling me we're tapping out at this level. Probably going to start testing some recent support levels. 389 would probably be the first stopping point, I would guess. I technically thought we would approach about 4100, but doesn't look like we're going to get there. So we'll see what happens. And we'll take Tattooed Chef down to a 1 minute chart so we can see the volatility that comes in case if they do report today. If anybody has any news on them reporting, it was very confusing because when I looked at Earnings Whisperer, they're not reporting until the 25th, but then I read the filing and it says that they were supposed to report today. So up behind me, behind my head here, behind the big dome, is their 1 minute chart. So we'll see the volatility with Tattooed Chef when it comes through. Did anybody post any other earnings that were interesting today? Yeah, exactly. I mean, honestly, if you just shorted, you know, I personally went long healthcare and shorted Tesla for like probably a good 6 months, and that was pretty good. That was a pretty good complementary trade. I didn't short it with true shares because that scares me with Tesla, but I bought like outside the money puts on Tesla. I would never short Tesla with like real shares because Elon could throw out one tweet and the stock will go up 20%, and those are shares I wouldn't want to be holding. So I don't play that game personally. Would I go all in on SPY puts? Not right now. I would wait until we're testing. If we were testing 4100, I would be tempted to buy some insurance at that level. I think we're going to trade sideways to down for the next couple of days. Probably an opportunity to trend back up. Plan to short triple Qs, maybe. Yeah, the triple Qs is actually an interesting short that I was looking at, as well as the recent bounce to me is when you look at the triple Qs, you look at Apple, Microsoft, Google, and basically everything that the triple Qs are made up of. They technically recently hit 52-week lows, bounced off of those 52-week lows, are now reapproaching lines of resistance. So they would be a good play, not recommendation for financial advice here, ladies and gentlemen, but I can see your strategy is what I'm trying to say. I'm not recommending doing that. That's a high risk type of play, but I would understand why you would be doing it. Obviously, you know, be careful. So, I mean, you also have the inverse ETFs that you can trade as well that you don't have to put a ton of money in. I could go over Walmart's earnings because that's kind of a big part of the US economy. I mean, by all standards here, I venture to believe that Tattooed Chef is going to report earnings due to the fact that the stock's down 10%. And insiders are probably getting the hell out of the way. I'm just joking. I don't know. So we'll see what happens here. I can go over to Walmart really quick. But if somebody can keep an eye out for Tattooed Chef, they might not report today. They might not report today, but it looks to me like they would. So Walmart closed today at 138, down roughly 2% on the day, as you guys can see here. Broke a key support on the Fibonacci. So 139.05 closed below that. So I'm wondering if Walmart's earnings are going to tend to be disappointing. We're going to have to find out. So what I'll do is I will put up, here's what I'm going to do. I'm going to put up Tattooed Chef's news, and then I'll have Walmart's earnings behind me. And once the stock starts moving, we'll know that they've dropped earnings. Anybody in the chat still own? Anybody in the chat still own Tattooed Chef? Anybody in here still own Tattooed Chef? Or is anybody speculating on their earnings and bought shares before? I mean, they basically gave us earnings. They basically said that they were going to be guiding down. So anybody in here? Nothing. Bueller. So Arthur, you own some? Yeah, Jazz, I feel the same way, man. Like, I don't get it. Yeah, I don't get it. I don't get it either. I understand the health aspect of it. I understand some aspects of it. Guys, smash the thumbs up if you don't mind. Arthur's getting clapped in it. I don't know, Arthur, you catching the clap or did you get clapped in the stock? I'm kind of losing you here. No, worst investment ever. Yeah, arguably up there. I'm sure there's been some other ones, but I would say, yeah, I got a question for everybody here. What caused Terry bought 300 shares on the dip? What caused the movement of Tattooed Chef? Does anybody know what caused it to like absolutely explode? Seems to be like what YouTube algorithm started pushing it out? And like who was a front runner of that? I mean, I think we all know Jeremy was the front runner of that, but does he really have that much power to really force that much action in a YouTube algorithm? Like someone with 700,000 subs, like I don't know, like I find that to be a little fishy. Don't you guys find this to be fishy? Yeah, but there was so many other better stocks there's so many better stories than frozen food, guys. Like so many better stories than frozen food. I honestly think the Palantir story is way better than the Tattooed Chef story. The SoFi story, way better than the Tattooed Chef story. I can even argue that, what's the other one there? The Pay Later company. Arthur, you know, this is not financial advice, Arthur. Come on, man. You know this. Let's be honest. Everything here is for entertainment purposes only. So, someone told me Walmart was reporting earnings. All right, let me go see who's actually reporting earnings today. Guys, let me know if anybody's dropping earnings and I'm missing it. TipRanks, oops, wrong one. TipRanks seems to believe that this is a $4 stock, guys. So you have some upside here. Now, mind you, TipRanks also only has one analyst covering the stock, which I've never seen before. Not only is there one analyst covering the stock, I got to show you guys this guy's picture. Gregory Kelly. Look at this guy. I mean, he looks like he's in 12th grade. He looks like he's getting ready to graduate high school. Of course, that would be who recommends Tattooed Chef. Look at this guy. He's got 4 stars. Does he know what he's doing? I don't know. Let me see. Look at this Gregory Kelly, 4.5 stars, Roth Capital. He's got a $4 price target with a hold on it with 19% upside. Well, he must be loading up the truck today. Jesus. I don't even have a $4 price target on this thing. I mean, a $4 price target doesn't even buy you one of their bowls right now with inflation. Like, how does that make sense? I hate how I have to keep shrinking down my screen. Sorry, guys. All right. We are on the website. Let's see if anything's dropped. Nothing's dropped so far. What is the worst investment you guys have made today? What is the worst investment you guys have made up to today? As far as, did anybody buy the hype on any of these stocks? I got the blind leading the blind in here, all right? I got somebody telling me Walmart's today, and then somebody saying Walmart's tomorrow. Time to go to Earnings Whisperer and figure out, like, what's really going on. Okay, we had Tyson Foods, who had mixed reports. And if anybody knows, I'm getting ready to make a move in Tyson Foods personally. I'm waiting to get it in the 50s. I think the economic setup is perfect for it for the long term. I think it's going to be a safe preservation of capital type of play. Probably not going to get rich off of it, but it was a $100 stock at some point, and I think you can buy it in the 50s. And I think you can get it around a 5 or 6 PE ratio with a 3% yield. So that's what I'm keeping an eye on. Would like to build a position in them. So Walmart would be at the top here, and I don't see Walmart anywhere on here. And the only reason why I got Tattooed Chef on here is because I read the filing, and they're supposed to report on the 14th or before the 14th. And then when I look on TD Ameritrade, it says after the bell. So I don't even see anything on here that is anything interesting about for earnings here. I don't know, guys. This could be a disappointing, they don't report type of day. Let me go back to TTCF really quick. We can always use this as a therapy session, though, you know? People that need to get some stuff out here, frustrated. All right, let's go through the comments here. Buy high, sell low, new anthem, good food. Guys, we got 29 people in here. Smash that thumbs up for me here. We're going to go through, if they report, we're going to go through TTCF. I bet you they'll report probably like at like 5 or 6 p.m. We got Palantir. Is it Arthur? Arthur, oh, that's hilarious. I wish I could share that. I'm on another program where I can't bring it up. Arthur's great. Arthur stalks women in the frozen food department hoping that they buy Tattooed Chef. I would say if you stalk some women in the frozen food department and they're buying Tattooed Chef, they probably have money. So you're on the right track, Arthur, you know. What a debacle of a year when we think about it, guys. Like, okay, Tattooed Chef, Palantir, crypto, everything that was any sort of speculation or is just completely crap the bed. Completely crap the bed. You know, it's disappointing to see, but unfortunately, I don't get it, guys. I just don't get how the YouTube algorithm pushes the most trash stuff. Affirm, Terry, thank you. Affirm and Upstart, those were the other two I was thinking about. So Affirm and Upstart were the other two I was thinking about when we were talking about stocks that took off on YouTube for unjustified reasons other than the fact that famous YouTubers talked about them. And then like other people jumped on the wagon, I think, and then it just caused a snowball effect. It just goes to show like how sick the algorithm is to push just garbage like that. It really is, because nobody wants to talk about, like, if I made anything about Tyson food, nobody would watch it. Arthur makes a good point. How does one get financially fit? You would think buying TTCF products. Well, you know, that was originally how we got financially fit, and then then they just turned into a financial shit show, and I had to get out of the way. So, all right, let me break down something here really quick. Arthur makes it like, Arthur, the whole problem with TTCF, and I brought this up and I got so much hate. Some guy told me that I was a complete moron. He called me an a-hole. The stuff he wrote on my posts said that Tattooed Chef would never get below $10. Talked all this trash. I tried to find him. He deleted all of his comments. And then I started deleting kind of the videos where I was making fun of people, because I didn't want my channel to be about jumping on the backs of other YouTubers and talking trash. Like, I decided to like reinvent my channel and get away from that, because I feel like I really want to provide a service that, or provide info that is maybe not at the most entertaining, but is as accurate as I possibly can make it. I'm not going to be 100% right, but I'm going to do my best to try to deliver good content that's accurate and hopefully helps individuals that are really serious about investing, not trash people that don't know what they're talking about. Now, unfortunately, I think the quickest way to fame on YouTube is probably doing that, but just kind of not the route I wanted to take. It didn't feel right at the end of the day. You know, these people have families, these people have reputations, and, you know, sometimes they probably don't know what they're doing. Well, I would say most of them don't know what they're doing, to be quite honest with you, but it is what it is. Somehow they were at the right place at the right time, made the right kind of content, and the rest is history, right? So, but to get back to Arthur Rogers. So Arthur, I think you make a good point. Where they made the biggest mistake was they are spreading themselves too thin, and they're continuing to do that, and it's been a losing recipe for them. So if you have a good product, right? If you have a good product, start with having the best product in the industry and build from that, right? So like, think about the best products in the world, okay? Like, think about Smuckers, right? Smuckers like started with one or two items, dominated those items, and then built out a army, and now is a conglomerate of food, you know, packaged food, right? And I think Tattooed Chef went the wrong direction. They should have just stayed focused on 5 or 6 items. Now, anybody that's subscribed to the channel, you all know that I've, you know, tried all their products, and that's kind of like what blew up my channel. And I would say that out of the 50 friggin' products that they have, guys, out of the 50 products that they have, 5 are legit good, like really good. And I'm not going to take anything away from that, okay? 5 are legit good. So why not have a small work staff, have a small, small overhead, and promote the crap and just own those 5 items? Frozen pizzas, the cauliflower mac and cheese, and maybe like 2 or 3 other items, and just own those items. Now they got 50 items. They're spread so thin, their profit margins are shrinking, and out of those 50 items, like 5 are probably legit sellers, maybe 6. You know, maybe 6. And that's where I think they made the mistake, is they tried to go too big, too fast, and they rode the SPAC bubble. They rode the fact that investors, here's where it went wrong, guys. I'll tell you exactly where it went wrong. And this is not making fun of anybody invested in the stock. This is the truth, okay? Their stock price basically outperformed what they were really worth. And so they took on more and more risk with that, I believe. And so, you know, their stock price probably should have been, early on, I could justify paying $8 or $9 for their stock early on. when you think about their growth rate, they actually had they were vertically integrated. When you think about all the things that Tattooed Chef said that they had, when you look early on in their business, there was a path to profitability. And then all of a sudden that path to profitability really friggin' changed when they started like watering down products and just throwing as many products to the wall as possibly stuck. So they just threw a shit ton of products at the wall and just saw what stuck. And that's where they went wrong. And then they were spending, and then they were doing stock-based compensation with attorneys that made no sense, and they can't get their filings out on time, and their accounting's jacked up. So, you know, that's kind of where I think they made their mistakes. Yeah, I mean, she could be, you know, no opinion there. Popular Loaner, what is up? So, guys, we're just kind of like hanging out here, hoping that Tattooed Chefs drops some hammer here and gives us what we expect to be probably not a good earnings. Let me shrink this down a little bit more. Actually, we know it's not going to be good. I mean, here's what I'll do. I'll just start ripping through what they kind of told us. Shrink myself down here. I'll start ripping through kind of what they told us, and we'll go from there. All right, so let's just put it on over here. Hopefully you guys can see this. And, you know, anybody else who's in here, give me feedback on what you think they should be doing wrong, or if you own them. And I know we got a couple people in here that kind of admitted to buying the stock. And listen, man, I give you guys credit for admitting that you own it, right? Because a lot of people would not have the guts to come up here on and get ridiculed, because there's a lot of people in here that are obviously watching the stock fall, right? They want to see the stock fail. And for you to own that, and, you know, guys, don't make fun of anybody in here that owns the stock. That's not what this channel is about, right? Hopefully you can learn from this and make better investments in the future and average into an index, you know, and as you average into an index and you can start, you know, you build a big enough position, you can start speculating, you know, 5 to 10% of your portfolio on individual stocks once you start building that base, right? Or because this is a full-time, what people don't understand, guys, when you're speculating in these types of companies, it is a full-time job. It is a full-time job to watch these companies, guys, because you can't trust management. You have to be on top of everything. If something doesn't look right, something doesn't smell right, if something doesn't sound right, you get the hell out of the way immediately. So when they talked about vertical integration and I was seeing that their margins were actually shrinking, they lied to me as an investor. So I got out of the stock at $16. They lied to me because everything that they said was vertical integration, margins are going to grow. Well, the margins didn't grow. So I got out of the way. I'm just getting to the comments here. So anyway, that's just my opinion. And that's why, you know, I was going down the path of making fun of YouTubers and calling them out. But at the end of the day, let me ask you, while I got 40 people in here and most of you are probably not even subscribed to the channel, let me ask you a question. Is there more value in me kicking somebody while they're down, or is there more value in me creating good quality content that proves itself throughout history, right? What's more noble? What are people going to respect more 5 or 6 years from now? Like, yeah, I got 3,000 subscribers and it sucks. And I could probably have 15,000 subscribers if I just shit on everybody, right? But what is going to be more impactful for true investors that come to the channel and want to be unbiased and look at a stock and say, I was right, I was wrong, this is what I need to learn? What is going to be the true impact of that, right? And that's where I changed my channel. It was going down the path of, dude, I had videos and I've deleted a lot of videos. I'm not going to lie. If anybody calls me out on deleting videos, I have. So, well, I appreciate it, Arthur. Appreciate it. I can be a dick too sometimes. But like what do you want? When you really think about it, it's entertaining. It's entertaining to watch people make fun of other people. Like you'll watch it for 15 or 20 minutes but does that impact your life? Does that impact your life? Or does it impact your life when somebody shows you a different way at looking at an investment and actually breaks it down and gives you the pros, the cons, the bull case and the bear case? Because every time you buy a stock, guys, there is both a bull case and a bear case. And what's happened is people that are buying these high flyers, they're not looking at the bull or bear case. They're just looking at a 10x stock, and they're so greedy that they're looking past the risk that they're taking on. So in 5 or 6 years, I hope my channel blows up because I put good content out, not because I crapped on people that probably deserved it, But these people, you know, I don't know. Trust me, sometimes, guys, it's hard. Sometimes I want to get on here and just rip into people, especially after FTX, guys, especially after FTX. That's just me personally. It's hard to do it because it's like you see some of the people that have success doing it, and it's just like, you know, you wonder, like, I appreciate it. I hope so. I appreciate all the kind words. Thank you, Arme. So, Arthur wants to know how old I am. Arthur, I'm 38, man. 38 years young. And I'll give you a little quick background, Arthur, on me. So, 38 years old, military, bought rental properties as my first investment. And at 23 years old, I was making, you know, 120 grand a year with no which I thought was no responsibilities. Okay. And so I originally looked at properties before I looked at stocks, but was always fascinated with stocks and owning businesses. So that's how I moved. Anyway, long story short, moved down to Florida and became an advisor, which doesn't take long to become an advisor. I want everybody to understand, like, when people say financial advisors, it's a interesting word to use. Okay. I'm just going to put it that way. As a financial advisor, guys, you do not learn how to break down individual stocks. You do not learn how to do DCF models. You do not learn how to understand, you know, ROI and ROIC. You don't understand. That is not talked about as a financial advisor. As a financial advisor, getting your Series 6, it is all sales tactics. And basically what they end up doing is a lot of these companies or a lot of these advisors work with brokerage firms where they front load a cost. So they basically get a commission to put you in some sort of mutual fund that you could go find on any open market, pretty much. Okay. You could buy the SPY and be a lot cheaper. And then they charge you an annual fee on that, roughly 50 basis points. So a half a point. So that, and I just didn't feel right doing that because I'm like, I can give this advice for free. And so I did it for 5 years. Actually, hold on. I'll show you guys something. Hold on one second. Give me 1 second. Not what I wanted. So that guy in the middle was me back in the day. And let me see. That guy in the middle was me, and the guy to the right of me, or that would be my left. The guy to the left of me is basically, he was a senior advisor at the firm. I worked underneath him, and then the guy to my right was just a good friend, and we still stay in touch. He's actually in the mortgage business now, so he completely got out of the business as well. But, you know, it's an interesting dynamic being an advisor. I'm not trying to knock it. I think you can make a good living. You can make a great living, actually. There's no denying it. At the end of the day, it's a sales job. It really, really is. Until you get to a point where, you know, you're actually managing money. You're actually like putting call out, or you're putting put options to hedge people's portfolios, and you're doing kind of like more active management, then that's a whole nother different ball game. So when somebody says financial advisor, there's really a lot of different meanings to it, guys. Okay, there's a ton of different meanings to being a financial advisor. So just because somebody says they're a financial advisor probably means that they passed their Series 6, which most people can do in a few months, and you're able to kind of do mutual funds. You can't do individual stock transactions or anything like that. And yeah, it's an interesting life, and you can make good money, but it just wasn't for me, guys. Like I'm not trying to knock it. It just wasn't for me personally. So here, I got another one for you, I think. Hold on one second. Look at how young I was in this one. I was just not that lady. That's not me. That's me. Look at how young I was, guys. Young, ready to take on the world, ready to sell financial products, make an impact on people's lives. That was me. No longer the case. But yeah, so but anyway, yeah, let's see what's going on with Tattooed Chef. Shall we? Still nothing. Still nothing. Does anybody have any questions here on anything? Yeah, I know. And that's the thing. We kind of got guidance. Actually, if you guys want, I'll just throw it in the calculator just to see what we get for a stock price. Why don't we do that, and while we're waiting for them to report. So I already got everything teed up in here, so it's going to be pretty quick. I'll shrink it down so you guys can see everything. So I think the guidance was, I think you're correct. I think it was 40 million less, and outlook was, I'm going to go off of your outlook because I am beating the market. So I'm going to give you guys, I do not recommend doing this, guys. I do not recommend doing this, but I think we're going to have a pretty substantial market crash by the third quarter of next year. Okay. Basically by the middle of next year, I think we're going to put a market bottom in, and I can go over the technicals if you guys want. But the only thing that I bought, just to kind of answer your question, were two things. I bought 100 shares of Gilead Science at $62. And I sold and I bought puts, outside the money puts on Tesla. Okay, that's it. No, I'm not up tremendously, but I'm up. I'm beating the market by a substantial amount. Don't recommend anybody doing that. Most of my position is cash, and I'm getting ready to possibly make a big purchase in probably 4 or 5 different stocks, and one of those stocks is going to be an index. So I want everybody to understand that I'm not just running around naked out here. Okay, not just running around naked out here. I actually have an index. HPQ I do like. I don't like the cycle that we're in for it, but I would tend to probably buy it on the next dip. Now let me explain. So with the HPQ trade, I personally rather wait for the chips to sell off again and buy the chip makers. And here's why. I would rather own chip makers on the next, if we get another leg down and the chip makers get extremely cheap again, I would rather own the chip makers that are investing domestically, because everything we use going forward, now it might be a few years for us to get out of this, but everything we use going forward has a chip. I want you to understand that. HPQ, you're kind of limited to a few different things. With the chip makers, they're going to deal with some margin compression. They're going to deal with some inventory problems. But the thing I like about them is everything that we use. I got an Apple Watch on, right? Apple Watch has a chip. This microphone has a chip. The computer I'm talking on has a chip. My car has a chip, right? So the diversification of owning a good chip company, in my opinion, exceeds the value of the CPU play, or, you know, kind of that's just me personally, okay? But you have to buy them in the right part of the cycle, and you have to buy them at the right price, because I really think they're going to go through some serious problems. And we obviously know the forefront of that one is Intel, okay? And, you know, we have to kind of wait to see how things play out before we can really formulate any sort of opinion on that, because there's just so many different things, whether it's political or whether it's financial risk at play here with the chip makers. You want to see how these things play out before you start committing to some. But I would say that within that, and I'm not going to recommend any here, but within that, I think there is one or two ones that are safer, okay, that still have good upside. So let's get back to Tattooed Chef. I got them doing 275 for 2022. They came in with 235. So that is a $40 million drop. So you guys can see here that my analysis is spot on to what I had for Tattooed Chef, right? So I had Tattooed Chef at 275. As we can see in the chat here, someone dropped in. It is supposed to be 40 million less than that, which means that their growth rates are coming down, guys. So their growth rates are coming down substantially. So let's adjust the growth rate from years 1 through 3. I mean, what would that be, like 25%-ish? That would put us at 266. Where did you say they were coming in at? 235. Okay, so we want to get them around 250. So essentially their growth rate is going to be right around 22%. 21%. Okay. All right. So guys, I backed into the numbers here on Tattooed Chef. So in order for them to hit the numbers that we're talking about in the chat and taking off about 40 million in revenue, right? Which puts us right around 256 I got. And where are they supposed to come in at? They're supposed to come in at 235 to 245. So I got them coming in 10 million higher. Now, let me explain why I have them coming in 10 million higher before everybody's like, oh, this is not accurate. Okay. Unfortunately, the way that this model works, it's in stages of 3 years. So yes, I have them coming in 10 million higher in 2022, but I also have them growing revenue at 20% in 2023. So we need to stay focused on 2023 numbers, okay? So I put their 2022 numbers closer in line with what expectations are, but their 2023 numbers are now going to be coming in right around 300 million, a little over 300 million, which I think is very doable. We go out to 2024, 368 million. Now the question becomes, and I need you guys to kind of participate on this, what do you think the value, if they're already bringing down growth rates, but they're adding new dimensions to their business, which is probably going to keep their growth rates elevated, right? Where do you think their growth rates lie from years 3 through 6? Because this is where the art of models come in, right? Because anybody can go and plug in numbers and make it sound realistic, but who's accurate? Who's really accurate? Because I watch people plug in models for Palantir, guys. I've watched people plug in models for Palantir and saw them get $45 price targets. I saw them get $50 price targets. And I'm just like, I don't get that on my model, because I'm not willing to put 45 growth rate with perfect growth rates for 10 years and perfect margins for 10 years. That is just never going to happen in any world. Things out of companies' control happen every friggin' day. A friggin', a facility could catch fire and it's going to ruin their numbers, right? It's going to ruin their numbers, completely out of their control. But so when I see people do these analysis, it makes me like cringe, because they're pricing in perfection. And like, we obviously know going into a slowing economy, the biggest question is going to be, are people going to be paying $5 and $6 for a bowl of food that's probably not going to fill you up? when I can buy, you know, 2 large chicken breasts, even though it's vegan based, whatever. You guys are understanding the comparables here, I think. When I can buy 2 large chicken breasts for $5, and that's 2 substantial meals that are going to keep me full, probably for the day, versus a $4 or $5, I want to call it a side dish, okay? When I look at Tattooed Chef's bowls, they're more like side dish than actual complete meals. And I think that's a big problem. The pizza thing, that's why I really thought they should have stuck with the pizzas, right? Get good at the pizzas, dominate that market, and then, you know, kind of move other places. But that's kind of where I think, you know, that's kind of where I think they made the mistake. But that's just me personally. So we brought their growth rates down to 20%. What personally, you know, can they maintain 20% growth rates? Guys, yes or no? Leave a comment. I'm going to go off of what you think. I'm thinking if they add new products, okay, their revenue is still going to go up, but what's going to happen? Their margins are probably going to come down, right? Because of packaging costs. Here's what's going to kill their business. Minimum wage is going up, guys. Like, that's going to kill a lot of businesses. People don't understand this. Did you see the massive layoffs? Did you see what happened with Amazon? Amazon is making the most layoffs in the history of the company. Let me repeat that. Amazon, who's probably might be the biggest employer in the world, is, I would have to double check that. Maybe not. Maybe I'm being exaggerating, but is making the biggest layoffs in their company's history. And I have to attribute that to they had bad earnings, their margins are probably a problem, and I guarantee wages are a problem. And so how do you get rid of the wage problem? You put more work on people that work hard, and you get rid of people that you don't really need that are weighing heavy on the salary aspect of your business. And so is Tattooed Chef going to deal with the same thing? Probably, right? What makes them invisible to these same cost issues? I can't think of anything. So I got them doing 20% growth rate from 2023 to 2024. And honestly, I think I'm being fair because I got to give you a heck of a, you know, I think we're going into recession. So I would not be surprised if the growth rates suffer. So I'm going to be safe and say 20% growth rates. So Puzzle, they are supposed to be reporting, but yeah, I got nothing right now. So they could report late. They could report super late, guys. I just assumed after the bell today, like that blue ticker right here, and we just read the filing just to give Puzzle an update. So it says 11:14 after the bell, after market close, they're supposed to report. And when I read the filing, it says they're supposed to report by the 14th or sooner. So I imagine at some point today, they're going to report. Now, maybe they report super late when the markets close because they don't want to get a vicious sell-off right now going into tomorrow, right? Maybe they wait until like, what is it, 8:30? But let's get back to the analysis here. And I want to make sure. I mean, I told people about Corsair, guys. Where are they at right now? Guys, go watch my video on Corsair Gaming. I literally made a video on Corsair Gaming. Look at this is Corsair's price right now, guys. I literally made a video when they reported earnings and the stock was up 18%. Okay? Corsair reported earnings, the stock was up 18%, and I said, I wouldn't touch this. The margins are garbage. They have to have unbelievable fourth quarter earnings. Unbelievable fourth quarter earnings to even get close to what expectations are. And we're starting to see people lay people off in the fourth quarter, which is never seen, guys. You don't normally see that. You usually see seasonal hiring. We're seeing the complete opposite. We're starting to see seasonal layoffs right before Christmas, right before Thanksgiving, right before the most important holidays. We're seeing layoffs take place. Google, Microsoft, Meta, All these companies, guys, are laying people off before the holidays. You don't think that they know that we're possibly heading into a recession in 2023 here, and they're getting their books right to weather the storm? Come on, man. Like, these guys are, these companies have more data than anybody else, than Jerome Powell. Okay, they have more data than Jerome Powell. Listen, they have to, if you're betting on Corsair, you're betting on their acquisitions, guys. Okay? You're betting on their acquisitions if you're betting on Corsair, and that's completely fine. If you want to speculate, that's completely fine. I got a price target for Corsair as well, guys. Let's take a look at Corsair's 1 year price, or 1 year price. $10.96 is the low on Corsair Gaming. It had a vicious rally on awful earnings, okay? And I tend to believe it was a short squeeze. All right, so just to give you guys a heads up, we're at $1.92 without finishing Tattooed Chef's model yet. But let's go. I just want to show you, I think I still have Corsair up here. We got Oatly up here. We got Oatly at $1.18. I'll tell you what, Tattooed Chef and Oatly, man, they're making a run for who's gonna shit the bed faster. We got Meta, we got Airbnb, we got Pinterest, we got SoFi, Disney. I might have accidentally deleted my Corsair earnings, but I think I was around $8 to $9, so I was $1 off from the low. Which, guys, if you really believe in a company and you're running your models, you know, it's okay to start building a small position at those levels if you're $1 off from the levels, right? I mean, like, what are we talking about here? But they have to cash in on their acquisitions. It's the only thing that's going to work for them. Their margins are too small, and they're in a sector that's probably going to get absolutely annihilated after this fourth quarter. Okay, you heard it here first. Who was that? Yeah, Arthur. I understand about the Elgato brand and all that, but here's what I didn't understand. Those earnings were garbage. The only thing that saved those earnings was the conference call of them expecting to hit fourth quarter numbers, of them expanding margins. Now, we heard this from a lot of different companies, guys. I want to just, remind you, we hear people talk about companies that are going to expand earnings and they're going to change everything. Listen, let's think about this, guys. Let's think about this really quick. Their stock price just shot up from $10 to $18. And what did they do? They just put a stock offering out there. You don't think that's market manipulation, guys? Let's think about this. Please tell me you're more in tuned than, if you're a walking zombie, then please leave the room now and hit a dislike. But let's think about what happened. The stock was at $10. They reported garbage earnings and then came out and said they're going to hit fourth quarter, they're going to expand margins, completely ripped the stock back around because it's a heavily shorted stock. I think the short interest was close to 40% in the stock. Mind you, anything over like 15 or 20 is a lot, okay? Heavily shorted. They caused a short squeeze, and now what are they doing? They're offering shares. Guys, please tell me you're smarter than this. And you know what? It might work out for the company because they might be able to build a bunch of capital, and they might be able to get their balance sheet looking a lot better and get through the next few years that are probably going to be a little difficult. And once the cycle hits back up again and people want newer electronics and the job market's better and people have more confidence, right? A big part of it is the consumer confidence that's absolutely in the shitter, right? Then at that point in time, they're probably going to be a good buy. So I hope it works out for them. But like, let's think about how this... Somebody just said that they're offering shares, and it wasn't me, but If you look at what the stock price is doing, the stock was at $18 today. It's currently down to 16, guys. The stock just dropped. The stock is dropping 20% after hours. Look at that. That's Corsair stock after hours. After I told you guys, I almost want to pull up the video and show you. It's just like the comments that I get. The comments that I get are just silly. They're friggin' silly. I just don't understand people. People love lighting their money on fire. So, yeah, I mean, this is going to be something to watch for tomorrow morning, guys. This is going to be something to watch for tomorrow morning. Let's pull up the news feed and see exactly what happened. I really hope Tattooed Chef reports earnings and this wasn't a big disappointment, but we'll finish our analysis on it. Boom, you're absolutely right. Who called this? Who called it? Who called this? Charlie. Charlie called it out. Charlie's been a subscriber. He's active, positive person on the channel. Love it, Charlie. Always love your input, by the way. He's absolutely right. Corsair Gaming launches public offering. Announces $75 million common stock offering. $75 million common stock offering. Which, guys, guess what? Guess what? That's a smart move by the company. That is a smart move by the company. Why is it a smart move by the company? They are in some shit. The company is in shit. Okay? They were a $50 stock and they were down to a $10 stock and caused a massive short squeeze, got the stock back up to $18, $19 and dumped at a high level. Why wouldn't you? Why wouldn't you raise capital at the highest and buy it at the lowest? There is nothing wrong with what they did. I could have called it a mile away. I could have called it a mile away. And it's in fact, if you go back and watch my video, I tell you guys, expect them to dilute. There's not enough capital on their balance sheet. Literally said that in the video. I'm pretty sure. You can quote me, but I'm pretty sure I did. I don't know. Maybe I didn't, but I think I did. And yeah, I mean, I love their products. Listen, there's a difference between liking people's products and liking the business. Okay? I'm no joke, guys, like no joke. We're going back to Tattooed Chef. Their friggin' white pizza. I might even have it in my freezer. Tattooed Chef's white pizza. I would go out and pay for $15, $20 at a restaurant and you can get two for like 11 bucks. It is their best item. Would I invest in the company? No, I would not invest in the company. I don't like how it's being run, and I think they have bigger problems than one good pizza. So, and you'll probably see, here's the thing, you'll probably see Corsair stock price recover just because there's a big following. It recently had a big rally, so you're going to get a buy the dip. Oh, it went from 19 back down to 16. You're going to get the buy the dip crowd. Overall, 75 million of offering. That's like 20 million shares, right? You figure, or more. It's actually more than that. It's closer to 30 million shares. Let's take a look at how many shares that should be. So the high over the last, let's see what the high was, because I guarantee they sold at pretty darn close to the high. Squeezed up to 1850. So that's 4 million. That's 4,054,000 shares. 4,054,000 shares. So just under 5 million shares. Not too bad. I would say from a company perspective, guys, I think they had to do it. If you want me to be honest and you're invested in Corsair, I probably wouldn't be mad. And I would say that their stock price is probably not going to suffer nearly as bad as it should because of the recent rally that it's had. And, you know, I think it's got some life. in it. So, but longer term, I would still be concerned of, about the company. You know, that's if they got in at the 1850. I think they probably sold around 1850 if I were to guess. So, but it could definitely get back below. It could definitely get back below those levels at $10 as you guys are talking about here. All right, so let's just finish up Tattooed Chef really quick, just in case they report earnings. I got nothing on my end, so I don't know if anybody sees them report. Just give me the heads up. We're gonna finish out this. We're gonna finish out this analysis really quick. All right. So I got them growing 20% through a recession, which is probably unlikely, but you know, maybe it's not. I don't know. Who knows? Maybe we don't go into recession. I don't know. If I was a betting man, I would say by the third quarter we're going to be in recession, but that's just me. All right. So 20% growth rates from years 1 through 3, which puts us at $368 million of revenue by 2024. Okay, in the chat, I need your help. I need everybody's help in the chat. By 2030, okay, by 2030, will Tattooed Chef do $1 billion in revenue? Yes or no? Because that's how I'm gonna do my analysis. By 2030, will Tattooed Chef do $1 billion of revenue? I need a yes or a no, because I'm gonna average it out and see where sentiment is on the stock. Okay. Now, mind you, I've listened to many calls with probably a lot of you that are subscribed to the channel. And what do they say? We have a run rate to $1 billion by, I think it was 2026 or 2027 with the new facility. We got a hell no. I still don't think they will exist after 2025. So Sean's saying that they're supposedly reporting tomorrow. Well, Sean, I read their statement and they're supposed to report before the November 14th. I got a feeling it's probably going to come out after hours so it doesn't sell off too bad. But that's what I literally just read the report. So, but I think they can get an extension by 24 hours. So maybe they will. So we got somebody who believes that they can do about $1 billion around 2027. Now, I'm not picking on you. Is it Arudra? I don't even want to pronounce that. Arulda. I'm not picking on you, but in order for them to do, I just want you to have realistic numbers here. And okay, and this is me trying to help. All right. This is me trying to help you guys. All right. I'm not picking on you. This is why I don't want to make fun of other YouTubers. Okay. Because it's not your fault. All right. I'm being kind, and guys, be kind in this chat. Right now, I have them in 2026, or you said 2027. In 2027, I have them doing under $700 million in revenue. Okay. I want you to understand that is over 2x. That's about 2.5 times what they're going to do this year, and they're guiding down. Okay. You having those expectations is only going to hurt one person. Okay. It's going to hurt you with your valuation. You would rather undershoot and say the company guided down 40 million this year. What is a realistic rate that they're going to grow? Okay. 20%, I have them growing. I think that's a realistic rate. They've proven that they can grow at this rate. Mind you, I think we're heading into a recession and it's going to be a problem. Okay. When we look at the theory, if we look over the last 3 years, they've actually averaged right around 60% revenue growth. The problem is it's much easier to go from 50 million in revenue to 100 million in revenue and grow 100% than it is to go from 256 million in revenue to $1 billion in revenue. That's hard. That is hard in a frozen food business, okay? I'm being honest with you. This is not a SaaS company that has massive contracts coming in the pipeline, okay? So I'm just trying to show you that that is not a realistic, in my opinion, that is not a realistic outlook for the company, okay? Can they do close to $1 billion by 2030? You know, some people are arguing that they might not even be here by 2030, right? So that's really the, you know, the price is actually saying that they might not be here by 2030, right? When you go from a $16 price to a $3 stock, there's a lot being priced in there that's saying that they're not going to make it, right? It's a penny stock. Anything under $5 is considered a penny stock. So I think I'm actually being kind by saying that I think they can get close to $1 billion in revenue by 2030. In fact, I would actually say I think they will just be shy of $1 billion by 2030 if the company is still around. If the company is still around, which means that I'm going to bring my year 6 through 10 projections down slightly to get them around 900 and change million of revenue. And if they exceed that, okay, here's what I want you to understand. If they exceed that, that is where you make money. So you would rather undershoot the company and buy them at a discount and lower the floor, lower the risk, and give yourself more upside. That is why we do not put a valuation on a company like Tattooed Chef that they're going to do $1 billion of revenue in 2027 when the company is guiding down this year, right? Because then you're going to overpay for the stock if you run your analysis at them doing $1 billion. That if you, let me show you, I'm going to show you guys exactly what happens if I put them at $1 billion of revenue by 2027. Watch this, guys. And this is such a great learning experience. So I want to thank you for your question. This is not me making fun of you. This is me helping you. So I want you to understand that. If Tattooed Chef could do $1 billion by 2027, they are a buy right now. They are a buy right now. I got a 16% rate of return, which is too high. So I'm going to put a 12% rate of return in here. Watch what happens with the stock price. You are now saying that you're going to buy Tattooed Chef at $4.05. Okay, if you believe that they're going to do $1 billion in revenue by 2027, which is right here, guys, 2027, a little over $1 billion in revenue. That is exactly what you're projecting. That means right now, when they report earnings and the stock, goes down, you've priced yourself well above where you should have. Well above where you should have. So right now you're essentially saying that the stock is undervalued by like 50% or 40% roughly. Okay. So right now you're saying the stock is undervalued by 40%, which does happen. That does happen. I'm not going to deny that. That absolutely happens. There's a couple stocks that I think are going to get to these levels really soon, and I'm very interested in them, and they're boring companies, and I know they're not going anywhere. Tattooed Chef, I don't have that feeling with. I can't tell you if they're not going to go anywhere. But what we just ran the numbers. If they're able to do $1 billion of revenue by 2027, it's a $4 to $5 stock right now, which means that there's 50, you think it's underpriced by 50%, where I think it's pretty close to fair market value. I'm just not willing to buy it. I'm not willing to buy it, right? So when I ran my analysis and it comes closer to that $2 range, 192 to like basically 192 to $2 is where I'm thinking fair market might be, maybe 225. Okay. I'm only 40, 50, 60 cents away from possibly building a position if I did my analysis and I believe that. But because I have these extremely high expectations for a company that's done nothing but let investors down, you're really pricing in a lot of trouble for yourself. And so I just wanted to show you that, and I hope that illustrates kind of how it, this is why it's so important. You can have anybody putting numbers into a model. It has to make sense, guys. It has to make sense. They're guiding down in 2022 by $40 million, guys. That is a huge guide down. 2023, we could be going into a recession. I would not be surprised if their revenue is flat, okay? Which now throws off everything. Okay? Because if I think the revenue is flat for 2023, the stock is probably worth $1.50. So I just wanted to kind of like show you that, because that is a great example of what you need to be careful of when you're running analysis. So that's good. I'm glad you got out of there in time on the course here. Yeah, I mean, listen, if you're invested in them at this point in time and didn't get out, I just, I'm not recommending selling it at these levels, guys. There's a difference between buying a stock and building in a rate of return versus you held something down and you're going to hold it regardless. Then don't friggin' sell it. If you have that much faith in the company, then don't sell it. But what I wanted to show is somebody who maybe hasn't bought the stock or hasn't done an analysis. They can physically see that when you move the numbers that aggressively, it changes everything, guys. It changes everything. I mean, if I go on here and I pull up Palantir and we go back way back when Palantir was doing like ridiculous revenue growth, ridiculous margins, you're going to see that you could easily pay $35, $40 for the stock. And the same thing can be said if I put bigger margins on Tattooed Chef. If I put more margins on Tattooed Chef, guys, the stock gets stupid. It gets completely stupid. I mean, this is why it's so important to understand when you're doing your models not to get attached to the numbers and use realistic stuff. Because the only thing you're doing is you're building safety for yourself. So, I mean, if they're doing $1 billion in revenue by 2027, what happens if what happens if their their vertical margin expansion is there and they get 12% margins and then 15% margins, okay? Using the 2027 expectation of $1 billion in revenue. Well, now it's a friggin' over a $6 stock. So now you're over 100% undervalued. I don't think that's the case. That's just me, personally. So hopefully everybody's making sense of this. If anybody has any questions, put them in the chat. I'll try to get to them. But that's how I do my analysis. If you don't like it, I understand. It's conservative. But listen, investing is a game of patience, right? What does Warren Buffett say? It's like baseball. I can sit back and wait for the perfect pitch to swing at. Let me repeat that. I can sit back and wait for the perfect pitch to swing at. I don't have to force it. I don't have to get FOMO. I don't have to overpay. And the perfect pitch, in my opinion, is coming real soon. Real soon. Like 6 to 9 months away soon. And you're going to say, man, I wish I didn't buy Tattooed Chef. I wish I would have had capital because Apple's at $90 a share. Or, Google just crashed to $67 a share. Or Meta's down to $77 a share. And then you're going to say, man, I wish I would have waited for that perfect pitch. Every day that we have an opportunity to buy a stock, you can wait for that perfect pitch. So, I'll probably end it here because I'm just not thinking that they're going to report anytime soon. But we'll sum it up. I basically ran a quick analysis using lowering their growth rates to a more realistic expectation after the downgrade on Tattooed Chef. And guys, I still get like a $2 stock here, like, and it's at $3. So it's like, you know, if they have a horrible earnings and you believe in the company long term, it might be a good buying opportunity. That's not a recommendation, but you know, it's if they, which they've kind of already given all the news. I think we all understand what the news is going to be. I honestly just want to see what the market reaction is, and I want to see what they're doing with their share dilution, and I want to see what their balance sheet looks like. We already know what the revenue is going to be, right? We already know what the revenue is going to be. We have questions about margins, and I want to see the balance sheet. I want to see share dilution and kind of the other things that are just not talked about. So we'll answer some questions if anybody has any. Yeah, they burn a ton of cash, guys. TTCF is valued less than 2 times revenue. If they survive, they are a 3x by 2027. Okay. So Terry, I don't know. All right, Terry, let me ask you a question. This is a good question. When you go off of price to sales or price to revenue, that is a very dangerous game to play, Terry. Okay. And if you're I got a feeling, Terry, I'm not picking on you, but I got a feeling you're probably watching Jeremy from Financial Education, if I were to guess. Okay. I'm going to show you something right now. Let me think here. Let me think. Okay. Give me 1 second, Terry. I'm going to help you out. Just give me 1 second here, because I'm trying to figure out how to illustrate this to you, Terry, the best way I can. I'm a visual learner. I can't read directions. Like, I have to like physically see something put together. And so that's how that's how my brain works. That's why I use a lot of visual models for myself. But for you, I'm going to show you something. Okay. Because I think you're asking a phenomenal question. All right, Terry, I'm going to show you a company right now. Okay. Terry, are you in here? Give me a thumbs up if you're following, because this is specifically for you. So I hope you appreciate this. Let me move this over here. So let me just make sure. Yeah, dark matter. I got a feeling they're not reporting until after the bell. So, but I think there's been some phenomenal questions. Okay, Terry, perfect. Okay, follow me here, Terry. I want to show you something. This company I have up, I'm not going to mention their name. If you come across it because you can see it, that's fine. Terry, this company has done over $1 billion of revenue. Let me make sure you can see this. Okay. I want to prove this is such a good point, guys. This is why you have to stop listening to frigging idiots who don't know anything about finances and how to evaluate frigging companies. Okay. And I'm not an expert, but I have a better understanding of what they're doing. Terry, the company I'm showing you right now is doing over $1 billion of revenue. Can you give me a thumbs up and say that you can see this? They did 1.1, almost 1.2 in 2019, had a little dip in 2020, as everybody else did during the pandemic, and then 1.16, and now in the trailing 12 month, they're starting to push back to $1.2 billion in revenue, which is about 5 times what Tattooed Chef is doing, right? Give me a thumbs up if you're following, brother. This is not me picking on you. This is me showing you something. Got it. Okay. So Terry, let's go to free cash flow. First off, does Tattooed Chef have free cash flow? The answer is no, Terry. Okay, I don't know if I know there's a little bit of a lag. The answer is no, Tattooed Chef does not have free cash flow. This company is doing over $1 billion of revenue for the last 3 and 4 years, pretty much, minus 2020, which, can we give them a pass for that? Yes or no? You let me know. Can we give them a pass for that? I would say yes. Okay. They do have free cash flow of over $80 million over the last 3 years. Okay. So they free cash flow. They do $1 billion in revenue. Terry, their price to sales, Terry, is 0.7 and 0.86. Okay, so if I would have bought this company at 1 times or 2 times price to sales, I would be down 60% or so. Okay, 60% or so I would be down. And this is a company that has over $1 billion in revenue, has free cash flow, and when you use metrics like price to sales and you use metric like price to revenue, you get in a lot of trouble. A lot of trouble. People that use these metrics don't know how to value stocks. Okay? I would much rather see you use a trailing PE ratio, a forward PE ratio, and don't even look at the price to sales or price to book. Okay? Or price to revenue. Look at the price to revenue, Terry. The price to revenue is 0.6 right now. 0.6. You're basically buying the company for 50% of the revenue. And what company are we talking about, guys? We're talking about GoPro. What's the PE ratio on GoPro? It's currently sitting at a 10. The market cap on GoPro is $866 million, and they do over $1 billion in revenue. By every metric to man, this is a cheap stock. But you have to run your analysis, because are they losing market share? Are they burning? Are they diluting? There's going to be factors. Are they getting negative return on capital? There's going to be factors in here that you're not going to see that make it look cheaper than it is, right? And I think GoPro is interesting under $5. I think it's an interesting stock under $5. I would probably buy it right before the holidays, maybe, as more of a speculation play, and I wouldn't put a lot of money in it. Maybe I would, if it got to that $4 range, I'd buy 200 shares, because they have free cash flow. They're doing $1 billion in revenue. And by most metrics, I would probably have to run a DCF model on them. But by most metrics, I would say that it's a fairly cheap stock. Okay. But it's not going to grow unless if they get an M&A acquisition, or unless if something really takes off, or they invent something, they start spending more on like development. They start developing more modernized cameras that we use on a daily basis. And the big thing about GoPro was that I think they had, military contracts and law enforcement contracts. That's how we get all this footage nowadays when cops are in high-speed chases or they're breaking in houses, like to make sure that things are done legally. And GoPro is a big part of that. So there's actually a good defensive side to GoPro, if I'm not mistaken. I don't quote me on this, but there's a good defensive side to GoPro, the fact that they get government contracts. And so their revenue is a little bit safe, if I'm quoting that right. Okay. So just kind of wanted to show you that. So hopefully that makes sense. Hopefully everybody makes sense of that and don't get trapped into that. So, if we got any questions, guys, I might sign off here. We'll take one more look at Tattooed Chef, but I might sign off here. That means a lot to me. Yeah, I mean, listen, not everybody, trumpet race and motorcycle parts, not everybody's going to agree with 100% of what I think. What I think about stocks, because everybody, listen, stocks are very subjective. there's a lot of there's a lot of feelings and a lot of different ways a stock can play out. So, that's kind of, unfortunately, that's kind of, some people can be right and some people can be wrong. Even the best investors in the world are wrong, guys. Even the best investments in the world are wrong. Puzzle, I can't thank you enough for that, man. I really, really appreciate it. Thank you so much. You've been an awesome contributor, and I know we got to get you on here and would love to. And that's the other thing, guys. I would love to get subscribers on the channel that actually, want to talk about stocks and want to that have their own ideas, and we can bounce ideas off of each other. It's not about being right or wrong, guys. It's about creating a community of people that want to help each other, right? Because Terry, you asked a phenomenal question. Terry, and I want you to understand that the metrics that you're learning from other channels, maybe, or wherever you're getting those metrics from, are unfortunately not the ones you should be looking at, right? Yeah. So hopefully everybody enjoy that. We're going to take one more look. Puzzle, can't thank you enough, brother. And we will get you on. We would get you on the on this live stream one of these days. I know we were trying to get that going. Their growth will slow down as they have no cash going into the business. I'm not sure if you're talking about GoPro, if you're talking about Tattooed Chef. They miss this year by 40 million when they already lowered it by revenue drop. Oh, did it come out, guys? Hold on one second. I don't see anything, but yeah, no Ari today. Dark Matter, no Ari today. I kind of just went on here to was hopefully going to do a stream on Tattooed Chef, but that kind of fell through. So I'm guessing they're going to report. They're probably going to report either tonight when the bell rings. All right, here's what I'll do. I'll keep an eye out, guys. Everybody that's on the channel, make sure you subscribe and go to the community. If they report tonight, guys, go to the community, my last community post, and just let me know that Tattooed Chef reported earnings, and I will try to get on the live stream even if it's like super late. Okay, just to kind of help you guys out, or just, if anybody's interested, we can kind of rendezvous back to that. So, and then if we don't have any more questions, I kind of want to go back to Terry one more time, and I'm not trying to focus on one person, but I think that this is huge. I understand, but I'm considering growth of new companies. It's not a single element you have to consider. Their market, like I said, TTCF needs to survive, and okay. So it's, Terry, this is a tough question here, because you could be, listen, I could be completely wrong, and Tattooed Chef could blow up in the next year or two, but we're starting to see a lot of things here, and I want you to understand this, that the company has been guiding down, has not been keeping its promises. There's a lot of red flags here where it's okay to sit back and wait for some good things to happen before you put your capital to work. Terry, I don't know what you do for a living, but I imagine you work very hard for your money, and you have an appreciation for every dollar that you put into a company. And that company should have the same appreciation for your money, right? And that's why you see companies like Coca-Cola that return, and I'm not going to, talk that dividends are great, but companies that have been paying dividends for over 20 years, they have a respect for individuals that are willing to invest their hard-earned capital in the company, and their growth rates are not going to be great, but how they reward you is cash flow, right? They pay you a dividend consistently, and that comes, listen, it all equates to the same, and you would rather have growth over dividends 100%. But what you have with those companies, Terry, is a track record. And unfortunately, with a company like TTCF, they haven't had a good track record over the last 2 years. It's really been disappointment after disappointment after disappointment, and now they're guiding down. And the last thing you want to see with a growth stock is guiding down, okay? It's okay to have a flat quarter or maybe a small miss, but the type of guidance that they recently have given is a guidance of concern, in my opinion. A 40 million reduction on 250 million of revenue is a substantial guide down for a quote unquote growth company, okay? Substantial guide down. So you have to put everything in perspective. The things you want to see is you want to see the small things get done. You want to see clean balance sheets, okay? Do their assets, do their cash on hand outweigh their liabilities? If you can find this, Terry, you'll find a good stock. Do their cash assets outweigh the liabilities? Are they close, or are they starting to free cash flow? Okay, that's probably more important than anything. And then on top of that, yes, you want that top line growth. And so what makes Palantir such an enticing story is the fact that if you back in stock-based compensation, they're free cash flowing, they're growing over 30%, they have a huge addressable market. But then when you look at the negatives, you have to look at the fact that they are diluting. That, when you bring it down to earnings per share, it's not what is expected of the company. And so there's a lot of red flags with that. So to find the perfect growth company takes a tremendous amount of work, and it takes a tremendous amount of digging into the numbers and understanding every nuance that the company is doing, right? You have to understand if they're invested in other companies, like what percentage is that going to impact their revenue? Because that could be a hidden value, underlying value that comes to fruition at the end of every year. So just kind of giving you those types of nuggets there. So for me, you want to see growth, you want to see top line growth, you want to see margin expansion, you want to see a clean balance sheet. Ideally, you want to see management that has executed before, okay? That's an ideal thing. On top of everything else, the most important thing that you want to see in a growth stock, in my opinion, is the fact that they have a moat and they have a competitive advantage. And Terry, how you know a company has a competitive advantage is you look at sales, general, and administration costs. When sales, general, and administration costs come down or flatline, and they are starting to dominate the industry that they're in, they are gaining a competitive advantage. So just some stuff. I don't know how I would order all that, but that's what I would be looking for in a growth stock. Okay. So hopefully everybody enjoyed that. If you're not subscribed to the channel, would greatly appreciate it. Consider subscribing. If you could smash the thumbs up before we leave here today, I would really appreciate that as well. And guys, thank you so much for spending your day with me, and we will see you next time, investors. Peace.